What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be taking a look at a news article that recently came out that's talking about the fact that Alphabet or Google could be losing their spot as the default search engine on Samsung phones. And what we're going to do is we're going to take a look at that news. We're going to take a look at what percent of the phone market Samsung actually makes up and what that would mean for Google if they lost that percent of the market. Then we are going to take a look at the search engine market and how that has changed over the last few years and go into the DOJ case against Google and how this would actually impact that case. And then finally, we will take a look at Google's valuation and talk about how that could change if this starts to become more of a reality with this deal between Samsung and Microsoft. So if you enjoy the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at their stock chart. We can see here today that the stock basically traded sideways, moving down 0.31%. But in the morning, the stock actually traded down in a fairly significant way, recovered throughout the day, and then it had a little dip here at the end of the day. If we look at the last 5 days though, this is where we see the move. So the announcement was made here on Monday morning, and we could see that before this announcement, the stock was trading around $109. And then after the announcement, the stock actually fell to around $104.50. And that is about a 4% move down. And then throughout the rest of the week, we've seen the stock kind of continue to sell off as investors have really started to digest some of what this news could mean for Google as a company. And the news that created this dip is that Samsung phones may switch to Microsoft Bing as their default search engine. Right now, Google is paying billions and billions of dollars to stay as the default search engine on a lot of these phones. We can see that Apple right now, they are paying $20 billion annually to stay as the default search engine on Apple phones. They have a similar deal with Samsung. Samsung, I am guessing it is a little bit less than Apple, and we'll see why here in a minute, but they are still paying Samsung billions of dollars, I'm sure, to stay as their default search engine. And what that means is if you go to your phone and pick it up right now, whether you have a Samsung or an Apple, and you go to your internet browser and search anything, it will default to using Google as the search engine. And the reason this is so important is that Samsung is the #2 player in terms of market share in the smartphone industry. We can see that Samsung currently makes up 30% of the market for smartphones, while Apple makes up 48% of the market. So we are talking about almost 80% of the market made up by just these two players, Apple and Samsung. So for Google, these are huge deals. If they're able to maintain Apple and Samsung as their default search engine browser, then they are able to access all of those eyeballs. Everyone who uses an Apple phone, everyone who uses a Samsung phone to search on the internet, to potentially buy things on the internet, Google is able to use those eyeballs to advertise to and basically bring in more revenue and more EPS for the company. And with so many phone users having their default search engine as Google, Google has been able to maintain their dominance in the search engine marketplace. We can see that right now they're sitting around 85% market share in terms of search engine. Bing is in second at 8.85%, and Yahoo is sitting at third at 2.59%. However, this clear dominance of the search engine marketplace has not come without issue. The Justice Department and attorneys general allege that Google's suite of online ad tech tools, technology to buy, sell, and serve ads online, prevents competitors from entering the market and blocks publishers from monetizing their own content. Basically stating that Google is believed to be a monopoly by the Justice Department, and there is currently a lawsuit against the company to break it up and potentially divest certain parts of the company to allow for more competition in the online advertising space. In my opinion, this deal with Samsung and Microsoft of them potentially converting over to Microsoft Bing for their default search engine could not come at a better time for Google, because right now they are under a lot of pressure from the DOJ. And if the DOJ sees this deal and sees Samsung considering a change, it actually shows that there is more competition in the online advertising space, in the search engine space, as the DOJ originally thought. A final and very major point is that Samsung is a large manufacturer of Android phones, and Android is actually owned by Google. So there are basically two major operating systems when it comes to phones. There is iOS for Apple phones, and then there is Android for Samsung phones and a lot of other phones. And those are the two main players in the market. I have personally actually used a Microsoft Windows phone, and the operating system for Windows on phones is very clunky and very outdated. And I think the only way Samsung really switches away from Google as their default browser is if they were to switch away from Android as well and switch to a Microsoft or Windows type of operating system. And honestly, I think think if they were to do that, I think they would run into a lot of issues with customers. I think a lot of customers get used to the operating systems on their phones. They like the layouts of them. And if you were to switch the operating system, potentially you could see a lot of people switching away from Samsung, likely to an Apple phone, just because they aren't comfortable with the new Windows layout or whatever they would go to. The other alternative is that Samsung would not switch away from Android, and Android could turn around and actually charge Samsung more money to actually utilize their operating system. So there's kind of a double-edged sword going on here with Samsung, where they're in a little bit of a bind where they are slightly actually committed to using Google as their default browser. So with all of that said, I do think that Google is trading around a fair valuation right now. They're trading at a 19.49 forward PE ratio. We could see that a few months back they were trading around a 15.85, and that in my opinion would be an actual good valuation. And then a year ago they were trading around a 24 forward PE ratio. I think a 25 is kind of getting to a premium right now with the way the market is trading. So if they were trading around a 25, I'd say they're probably, a little bit overvalued. At a 19, I think that does take into some of the risks to the downside with this DOJ case, with potentially Samsung switching to Microsoft Bing as their default browser. I think some of those are a little bit priced in. I could see Google actually falling maybe a little bit more, just as investors potentially price in if this deal were to get more likely of going through. But as of right now, I think they're probably trading at a relatively fair valuation. And with that, I am currently not buying more or adding to my Google position. I do have a position in Google. I like the stock for the long term, but with them trading at a fair valuation, I'm not really looking to buy anymore. I really like picking up shares, in the high 80s to mid 80s. I think that is a good price overall for Google. I think you'd be getting it closer to around a 15 to 16 forward PE ratio. And that's where I kind of feel comfortable. I think that they're at a good value for what you are getting with the company. I think again that there are some risks right now that they need to get past, but that is all my opinion. Make sure to do your own research. As I always say, do not buy a company just because some random guy on YouTube is talking about it. Make sure you are looking into the company and understand the risk and reward associated with that company. So with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.